Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bearish scenario where we're looking for a WXY, potentially a double zigzag with then an ABC zigzag over here in wave W, where wave B retraced to the 0.382, which is a common target for a wave B, but a rare target for a wave 2 in a potential more impulsive structure. Then we are looking for a 3-wave X over here in an ABC, which I'll show you in a second, where the triple top is very interesting, around 30.4k with some liquidity above. Maybe grab the liquidity before then a move towards the downside, where we are then looking for a wave Y in another zigzag to the downside, where the most common target for wave Y is taken from the high to the low of W to the current high over here of wave X, sitting between the 1 and the 1.236 at 23.7k to 22.1k, which also includes this support box over here that I have, which is sitting between 21.8 and 22.6k. Now that would also mean that price then grabs the double bottom that we have over here. Interesting in general, as that is like a magnet for price, and it would also mean that we fill the Bybit wick to 23.6k, which always has high probabilities as well. Now in a double zigzag, preferably the trend line that you see on the chart over here is broken. So it's a trend line from the high to the high of B over here, and then preferably you see this trend line broken before then a move towards the downside. Now clearly this trend line has been broken, so that is very interesting and definitely a bearish scenario that we have to keep in mind. For a wave X, the 786 as well as the 886 are still common targets as well, with the 786 being in perfect confluence with the triple top. And we're also still time-wise doing pretty well with wave X compared to, or wave W compared to wave X over here, where wave X is reaching the 1.618 fib time taken from the high to the low of W to compare the time in W with the time of wave X, but wave X can be longer, that is no problem. Now in this scenario, we are then of course approaching resistance, and there's a couple of things that I found that I want to share with you. First of all, there's a volume profile of this range over here. You can see we hit the value area low once, but now we entered the value area, currently basically working on like a retest, where then if we can make it, the point of control is the next target. And the interesting thing about that point of control is that it is very close again to that triple top, 30.3k, 30.425k for that triple top. So that could be very interesting indeed. If you pass the point of control with confidence, then of course the value area high could be next at 31.3k. However, there is more that is interesting over here, and I rarely ever show speed fans in my videos, but over here you see a fib speed fan taken from the high to the low over here, and you see the golden pocket, the 786 and the 886. These are the ones that I always use. Now you can use this as additional confluence in your technical analysis. You can see beautiful resistance. Eventually we move to the upside, we find support, move to the upside, hit the 786, rejecting confluence with the golden pocket over here, the normal fib taken from the high to the low. Then we pass the 786, and now we're basically on top of the golden pocket as well as the 786 line. And what is then interesting is that we could be looking for a bit of a move towards the upside still, also in the bearish scenario, of course also in the bullish scenario, which I show in a second. But over here, you then have the 786, the orange line, the triple top. You also have the 886 speed fan, which is a very, very important speed fan, because the moment you pass the 886, the probabilities are really high. You're going to move towards the upside if you can confidently close some high time frame candles above the 886. So you can see that I have a wide box over here, which is definitely an area of interest, and especially an area of resistance on the chart regarding the bearish scenario. Now in that bearish scenario, we are then looking for a WXY with inside wave X, a flat structure in an A, B, and then a C to the upside, 3, 3, and then a 1, 2, 3, 4, and then a 5-wave structure, where the most common target for wave C is between the two 1.618. And just see how nicely this is respected at the moment. However, a still rare target for a wave C is the 2.618. Now I don't expect that to hit, as then we basically take the high anyway, so that's not too bearish of course, but it does show that there's still some room as well to the upside, and it's no problem to reach the triple top area before then potentially a rejection in the bearish scenario. Of course, a expanding diagonal in a wave C, or in general anyway, is a rare target. You don't see this often, but in this scenario, you're looking for a 3-3-5, and the 5-wave structure, because of all the overlap, has to be an expanding diagonal, because a normal impulsive structure doesn't work due to the overlap. Contracting also doesn't work, and a double 1-2, well, we'll talk about that one in a second. And another thing that I like to talk about is this psychology scenario. It's like a fake out scenario, basically, where my thinking is it going to be this easy? You know what I mean? So over here, we have a trend line. Price moves above the trend line, long takes the high, target reached, you know, maybe people taking profit. And this is the exact same thing, right? It's just a different moment on the chart. You have the trend line, you break it, you're going to move up. Is it really going to be this easy? Right? Is it going to be two simple trend lines? You just long the breakout and you're going to look for new highs. Of course, that is possible, but an initial scenario when price was ranging over here, I was like, you know what I think is interesting? You bait the fake out of the trend line and then eventually you move towards the downside. So everyone that's longing gets stopped out instead of it being very easy. The first longers basically get stopped. You move towards the downside. And then of course, everyone will talk about the head and shoulders scenario with much lower targets. People get scared. There's fear. And then you use the scared feelings and emotions, and you use the fear and all the selling going on to fill your bigger long positions for then a move towards the upside. So it's like reverse psychology, right? Where at the moment, everyone would then be hyped like, oh, we're at 30K over here, you know, price is going to leave the train, or the train's going to leave without me, so I better just quickly buy, la-di-la-la, everyone buying over here. But then instead you move down, and then the scenario repeats at the lows over here, but then it's a fake out of the head and shoulders. And it's just something that I still play with in my mind. I cannot not see it, basically. So the bullish scenarios then. Medium time frame, flat scenario, ABC, zigzag in wave A with a diagonal in the end, ABC and wave B, and then eventually a wave C. Now this is a running flat scenario because wave C did not take the low of wave A. This is also extremely rare. A running flat is the least common flat pattern. By far most common is an expanding flat. Then you have the more regular flat like a range structure, and then comes the running flat. So this is very, very rare and also led to the double bottom that we have over here. Now, of course, in this particular scenario, you're going to look for new highs, where if we look at a interesting scenario for the bulls, then of course you have the double 1-2. Also, by the way, a leading diagonal and then a wave 1-2. But then, of course, it depends on how price moves to the downside. You want to see a 3-wave structure, while in the bigger bearish scenario, you're looking for more of an impulsive structure. So that is, of course, still on the cards. Now here we are looking for a double 1-2, so we then have wave 1-2 higher degree in green, 1, 2, 3, 4, 5 in green, and then inside wave 3 we have the blue count, 1, 2, 3, 4, and then a 5-wave move. But what is interesting here is that in the blue count, the blue wave 1, even though it is a lower degree Elliott wave count, which usually means they're shorter in time and they're shorter in price because it's a lower degree, and degrees are also bound not only price-wise but also time-wise. This wave 1 is longer in price than the higher degree wave 1, bit weird. And then you have this wave 2, which is bigger in time and price compared to a higher degree wave 2. So the double 1-2 scenario is a little bit awkward. It doesn't really look too great. At least you had some bullish divergences over here, which supported the move towards the upside and which have now played out as price took the high. So that is very nice. But it doesn't look too great. Now, of course, in this scenario, if we are approaching resistance here, it is no problem in this scenario to have a bit of a move towards the upside to potentially finish this blue 3, take the triple top, hit the resistance that I spoke about earlier, and then start ranging in this longer blue 4. So then you have a 1, 2, 3, then you get a 4, 5 to finish the green wave 3, and then you get another 4, 5 for more upside. So basically in the bullish scenario, you're going to take, well, high probability, you're going to take the high, of course, for then a range and continuation. While in the bearish scenario, I'd be looking for the triple top and the point of control to be hit, the resistance area, but then you want to see a rejection and you don't want to come back. That is the biggest difference between the bullish and the bearish scenario. Of course, here the triple top, I've been showing it like multiple times. Keep an eye on this one. Then locally, let's have a look. Of course, the weekend range, that is what is happening at the moment as expected. Typical weekend stuff over here where, you know, when price was moving, we made a video here. We were like, yep, it's probably just going to be a weekend range. Now, if we look at the CVD divergences, bearish CVDs over here, that's the one that appeared first, but then the bullish CVD came in hot, and now the bearish CVDs here are invalidated. You could still get bearish CVD divergences, but then with the actual high over here. So if we go to the CVD chart, you can see here lower high on price, but on blue, higher high CVD, that's bearish. But look at the dip on yellow over here, higher low on price, lower low on the yellow CVD, which counted the bearish one, and that one now played out. But you got to pay attention to that yellow line for bearish CVD divergences, because with this high, lower high on price, and you can see the yellow line here is almost crossing this little peak. And if then a candle closes with the line above this little peak, you got bearish CVD divergences, where then if price moves to the downside, this is going to be your target. And it is nice support because over here you do have a little bit of a range as well. So if we then look at the probabilities of the different scenarios, then at the moment on the medium time frame, I'm actually quite neutral. These are my old probabilities. No idea where the new ones are. But at the moment I am quite neutral. There they are. Look at me go. So on the medium time frame, currently my feeling, and from an Elliott Wave point of view, it's actually pretty neutral from an Elliott Wave point of view, because my feeling doesn't matter. But from an Elliott Wave point of view, in the bullish scenario, the 112 is not looking too great. An expanding diagonal is of course rare, and also if it's an expanding diagonal, you could also have the bearish scenario. So that's why it's bull/bear. Expanding diagonal is rare. 112 not looking great. On the low time frame and the micro, expect a triple top to be taken, point of control to be hit, and observe the reaction, right? Do we get a range and continuation, or do we drop to much lower prices? And then locally, a typical weekend range. Trade the range until it breaks, they say. No financial advice, of course. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.